Welcome students. Today's topic is adjustment for depreciation, dividends and taxes. All right. So if you're talking about final accounts is concerned, adjustment is very much important to complete it prior to go with final account statement. All right. So here, I'm going to cover adjustment for depreciation, adjustment for dividends, adjustment for taxes, and at the end, some sort of practical example in final accounts. All right. Okay, so to begin with, adjustment for depreciation. Okay, so depreciation, it is nothing but the reduction in the value of fixed assets. Okay, due to uses, wear and tear or obsolescence. All right. So each and every fixed assets must be have some sort of depreciation, and that depreciation method will be fixed. It is nothing like middle of the year we can change it, or any company can change. Okay. So it is calculated annually, definitely, and recorded as expense in the profit and loss accounts. So here one point is very clear. Depreciation calculated annually and recorded as expense in the profit and loss account. And also reducing the asset value on the balance sheet. So there are two aspects, one from the balance sheet side, another one from profit and loss side. So profit and loss side, it should be in the expense in the profit and loss side, the debit side, and in the asset value, it is reducing the value from the balance sheet. All right, so fixed asset value will be reduced. All right, so that is nothing but the written down value of the particular fixed assets. Now talking about the general entry, how it is passed. So depreciation account debit and to asset account. All right, why depreciation is debit? Because it's a kind of expenses, so debit all expenses and losses. All right. In case of method change, as I mentioned earlier, in case of method change, adjust previous years by comparing old and new method and change the difference to profit and loss. So if there is a situation or scenario in which middle of the year the process has been changed, the calculation method has been changed, then definitely the kind of comparison is required, old versus new method, and the changes, the difference to the profit and loss account should be accounted. All right, moving to the next, that is adjustment for dividends. So dividend is a share of profit distributed to the shareholders, declared only from profit after providing for depreciation. All right, so dividend is a share of profit distributed to the shareholders, declared only from profit after providing for depreciation. All right, so the proposed dividend for the current year are accounted in the next financial year after approval. Here the key point is the current year dividend for the current year are accounted for in the next financial year after approval. So approval from board of directors. All right. General entry for dividend, it is profit and loss appropriation account. Okay, and to dividend payable account. So dividend will be accounted in the next year. So it is dividend payable account. Dividend to be paid out only after loss adjustment and adequate positions or provisions for depreciation. So dividend can only be adjusted after the adequate provision for depreciation and loss adjustments. All right. Now moving to the next, that is adjustment for taxes. How it is adjusted. So provision for taxation is created for income tax on company profits. So here the key point is taxes is levied on the company's profit, right? It is accounted as expense in the profit and loss account. So it should be in the expense side, the debit side for the profit and loss account. and create a liability for unpaid taxes shown under the current liability. That means if anything which is payable within the year, that can be shown in the liability side of the balance sheet, or non-current if long term. All right. General entry for tax provision is profit and loss account debit, because it's treated as an expenses. Okay, and to provision for taxation account, because it will be paid from the provisions. So annual tax paid during the year is deducted from provision, the account which has created, and balance carried forward for the next year. All right. Now moving to the next, that is the practical examples in final account. So adjustment for depreciation, dividend, and tax affect both profit and loss and balance sheet. So one side, if it is expensive, then definitely debit side of the profit and loss account. Similarly, it would be deducted from the assets if it is depreciation. If it is dividend, definitely it would be reduced as far as the losses is concerned, or provision for depreciation. So depreciation reduces assets value and profit both, because provision for depreciation is required and it should be written off. That's the reason. One side, it is reduces the value of the assets, and another side, to create the provisions, the profit must be reduced. The provision for proposed dividend and tax shown under liability until paid. Definitely, the key point is it should be under liability until and unless it is paid. Okay. Cash flow statements. Cash flow statements reflect these adjustments as outflow in operating and financing activities, right? That is also important. So always check trial balance and adjustment note for the correct account, because trial balance is nothing but the reconciliation of mathematical error in the record keeping. All right. So these are the adjustment, and always keep in mind before going for the final accounts, it should be cleared, or maybe the entry has been passed or adjusted. So that's it for today's topic. I hope you understood it. Keep practicing at your side. Do let me know if you have any questions. Please visit my Urban Pro profile. Thank you.